Welcome to Larkin-Gowan Insights, accountancy and business advice for all, the series that gives you bite-sized tips and guidance on tax, funding, legislation, reforms and much more. With case studies, business advisory and sector specials and even interviews, our team of experts are committed to helping you navigate the world of accounting and finance, with a variety of presenters from across our specialisms. So, let's get on with today's show.
Welcome to this special mini-series, Beyond the Barn, the Business of Farming. I'm your host, Laura Clayton, an assistant manager in the Farms and Rural Business team. In each episode, I invite a different guest to share their expertise on an array of different business topics that affect the farming and rural community. We cover tax, obviously, legal matters, succession, inheritance, and much more. We go behind the scenes of how we support our clients and hopefully give you some tips along the way. This week, I am joined by Annabelle and Amber, and we are going to be discussing record keeping, data, and how important it is to keep this data accurate. So thank you very much, Amber and Annabelle, for joining. Please could you introduce yourselves?
Thank you, Laura. My name is Amber Rose-Barrett. I am an assistant manager in the Farms and Rural Business team based in our Fakenham office.
Hi, I'm Annabelle Smith, an accountant in the Farms and Rural Business team, and over the last few years I've been really getting stuck into the digital side of things, helping clients switch over to new software and offering training.
That's great, thank you both. So I've got two experts in this field, so thank you again for joining. So Annabelle, from a client's point of view, why is it important that we need to keep our records so accurate?
I think accurate record keeping is essential, especially in farming where things can change so quickly. When data is kept up to date, you can generate live reports and just give a true picture on how the business is performing. It also plays a big role in cash flow planning, knowing exactly what's coming and going and helps you plan ahead with confidence, whether that's investing in new equipment or managing seasonal costs, or just making sure there's enough in the bank to cover the quieter periods. Accurate records also make it much easier to access finance, whether you're applying for a loan, a grant, or speaking to your bank. Having a clear, reliable figures can really speed things up and improve your chances of getting that finance.
So it really is essential that the data is accurate, because otherwise we could be making wrong decisions based on data that actually isn't real, and then later on, late down the line, think, oh, that wasn't a good idea, or we shouldn't have done this just because the data wasn't accurate.
Yeah, exactly that. And it also helps us as advisors give better support when we have access to clean, up-to-date data. And that means we can offer more tailored advice, whether that's around tax planning, budgeting, or like long-term strategy in general.
That's a very good point, because we do get a lot of clients that come to us and want our advice or our input on these decisions, whether we can reduce payments on account or whether they should buy that piece of machinery. And so if we're looking at that data too, we need to, it's really important that we sort of see accuracy in that also.
Yeah, you don't want to see data that might be 3-6 months out of date just because they've done the bare minimum to submit their VAT returns. You need it to be live and to get the most out of it.
Great, thank you. So that is obviously from the client's point of view, but obviously if I flip this around, we've got accountant's point of view, which we have sort of briefly covered, but also from HMRC's point of view. Amber, why is that? Why are HMRC wanting the data to be so accurate too?
I think it really comes down to risk. I think obviously HMRC are responsible for collecting taxes, whether that's corporation tax, business tax of any other description, VAT, whatever the case might be. And if there's obviously gaps in that data, I think it's about it being accurate and complete. It just needs to be a true, honest reflection of what's actually going on. From that point of view, we can then obviously provide advice in terms of what might be allowable, what might be disallowable, and then really that comes down to the figure that's being used to report to HMRC. And I think there's so many strands to it. It's not just your personal tax at the end of the year, is it? It's everything as you're going through, and particularly with making tax digital on the horizon as well, I think it's even more important.
Yeah, they are all really good points, and like you say, I think there's lots of benefits, but one of the key things you mentioned is spotting mistakes. They're a lot easier to be done as you're going along than when you get your data at the year end and then you have to unpick it and try and work it out backwards, where if you've got it at a month or 2 months or whatever that period is, it's easier to look at a smaller section than a whole year and then try and unpick what's happened.
Yeah, I was saying to Annabelle, we've said many times this week actually, it's really just a case of, does the data make sense? If it doesn't, is something missing? just stepping back and looking at what the figures tell you and using that as the basis to fill in gaps. We always say in our team, a regular term that I use is garbage in, garbage out. It's really quite as straightforward as that.
And from a practical point of view, this potentially could save our clients time and money.
Absolutely. I think we've seen time and time again, particularly in our sector, where, the one thing that you cannot really put a value on is time. And it's making the digital software work for each client, making sure that they're maximizing the output, but for the minimum amount of time that it could possibly take them. And whether that's additional training or, involving us throughout the process, I think that's really key. And obviously, we've already touched upon the tax planning and that kind of thing. So accuracy potentially leads to saving money, but I think the efficiencies and streamlining the processes comes back to saving time.
Yeah, and I think it's also important to remember that you need to get it right first time, because otherwise the differences will just accumulate and get bigger, and then you'll end up not knowing what's going on at all.
I mean, from my experience, we still do have a handful of clients that prefer manual records, or they're using software just to do the VAT for MTD, but still operating on a manual basis as such. And, if you had any clients that were sort of deliberating at this point whether they should make the full switch to digital, what would your advice be, Annabelle?
I mean, absolutely, while paper records have been the traditional way of doing things, and they can still work for some, I think it's becoming increasingly clear that digital softwares just offer so much more benefits. I think with software, the main benefit is you get real-time access to data. It means you can see how your business is performing at any moment. It reduces the risk of errors, saves time on data entry, and makes it so much easier to share information with your accountant, advisor, or just other business owners. While paper might feel more familiar, digital tools can really transform how you manage your business. And I think we're always here to help clients find the right fit for them and make the transition really smooth.
And I think off the back of that, people listening might be thinking, what is the need for my accountant now? And it's the stuff that's coming out with the Making Tax Digital requirements and that kind of thing. That is a reporting requirement. It's not in lieu of your accountant. And I think there's also a significant difference between data entry. I always refer to this as I can drive a car, but I can't drive a bus. It's the similar thing, but it's not the same. And I think that's the difference between entering the data and getting everything on the system in order to meet your reporting requirements. It's then the uplift of, okay, and what does that mean, and what is my tax liability going to be? How can I mitigate that tax liability? What is my business strategy? That is our role, and I think it makes our role more real time if we can access this. I know Annabelle's already said at any point throughout the year. It's about being proactive, not reactive. So it's more assisting from that point of view as opposed to taking over all of the accounting tasks in house.
Yeah, that's extremely good point there. And I think, like you said, it's a good tool. We can get a lot of useful information from it, but the accountants are the ones that are then using that with their clients to get the explanations, the solutions to then, like you say, drive the business forward or make those decisions that the software just cannot do.
Yeah, within our team, we've got a large client base with a wide range of ages, and everyone is on a different digital journey. I think that's where we can come in and sit with our clients and almost ask them, okay, what are your concerns and how can we assist with that? Whether that's looking at how the manual records work and how we can replicate that from a digital point of view, or putting a timeline in place, getting these training sessions in now. Obviously, Making Tax Digital is on the horizon. It's going to pick up more and more people as the turnover threshold comes down, and it's really just having that soft landing into what is the change going to be and how can we support our clients. We do a lot of this in person. Annabelle does a lot of in-person training. There's always somebody at the end of the phone, and it's just kind of taking that individual worries and concerns and planning for them and their specific scenario and how we can help support them. Because obviously with the likes of Making Tax Digital, as I said earlier, that is a reporting requirement. It's not necessarily a choice, and I appreciate that can be massively daunting for people that have never had to use digital software of any description before.
I think that's also another really good point you've made there, Amber, is that we have to be mindful of our clients. Although there is that requirement and necessity to report, not everyone likes it, not everyone's happy about it, but it's just finding that way that suits that client. So we've touched a lot about the MTD for business and the record keeping for businesses. But obviously with MTD ITSA on the horizon very soon, we've now got a new phase coming in, and it's not just at business now. Obviously individuals are going to be affected too. What are your plans for this?
Yeah, obviously making tax digital for VAT has been in place for a few years now, and it's now switching to individuals having to change how they are reporting their information. So yeah, that's obviously quite a big topic. It's a big change for us. It's a big change for our clients, and that's going to be covered separately, I believe, in our next podcast.
It is indeed. So there will be a follow-up episode to this podcast where we will discuss the different options of accounting software for our clients. Thank you both for joining, and I will see you on the next episode. If any of our listeners have any queries or questions, then our contact information will be in the show notes.
Thank you for joining us for Larkin Gowan Insights, Accountancy and Business Advice for All. Don't forget, you can find more information about today's topic and more about how our team of experts can help you in your business by visiting our website, larkin-gowan.co.uk. Join us again next time for another fascinating insight into the world of accounting and finance.